Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Just want to do some grains commentary for you today, Tuesday, May the 5th, Cinco de Mayo. Let's start with corn. Yesterday you saw a really big planting number. Once again, farmers went out there. Iowa did 54% of their corn crop in 7 days. National average was 55%. So it beat all the high ends of the estimates. Obviously shows us really good start. Second to that, we got rain in the forecast, and you're also hearing guys talk about the fact that corn went in so well. A lot of farms, an extra quarter here, an extra few hundred acres there, so we're going to be watching how that develops closely. Obviously it weighed on corn today, even with a weaker dollar, but you did get actually a rally into the close for corn. Now it was only up a penny and 3/4 at the end of the day, but as you know, for corn, sustaining any rally lately has been pretty difficult. So looking forward, we'll see what exports have to say on Thursday. Obviously you want to see in excess of 1 million metric tons again. Obviously the weaker dollar's helping, but remember we got non-farm payrolls on Friday. You could do anything to the dollar with that kind of headline risk. Wheat market, there's nothing really to say. It's lower again. It was lower all day. It got off the lows a little bit into the close, but the big short is maintaining control of that market. And even though the Kansas City wheat tour is going on, no real news from that department yet. And until something changes dramatically, I think from an export basis, we need to get more competitive. And until that happens, I don't think wheat has a lot of reason to rally, other than perhaps some kind of a short covering rally in the near term. Soybean trade today was pretty wild. If you think about last week, my most recent video, I said, hey, I'm going to be selling rallies moving forward. We went all the way to $9.95 and then we broke the market 30 cents. I was surprised by the weakness on Friday, and then right away on Sunday night the market opened and up we go. Firm all day Monday, and then up again last night and up again today. What's interesting is the soybean oil market's been leading this. You had a 200 tick move in soybean oil in the last 2 days. It's a really big deal. Obviously you had technical event going on with the 100-day moving average. You got managed money that's long bean oil, and then second to that you've got the issues in Argentina, and a lot of commentary today about the strikes that are going on and how that might be hampering the movement of the oil out of the country. So all of those things together led to a very sharp rally in soybean oil, but you've probably heard us say it before. Generally, we're not trusting of a soybean rally that's led by the oil. Now, you saw meal come on a little bit into the close. I think that was probably people just taking off some of those meal oil spreads. We closed pretty firm in meal, but it was hard to, it didn't really trade higher at all during the session until you saw that spread unwind on the close. So for tomorrow, we'll see if we can kind of consolidate a little bit. You would expect, given where we closed, we can have a shot at that 990 area in the overnight, but just recognize, guys, as soon as the soybean oil calmed down today, you had beans go from 86 3/4 down to 78 in the flash of an eye. So I'm going to continue to sell rallies. I'm primarily on a day trading basis. We'll see how they open tonight, and we'll have another video for you later in the week. So again, this is Kyle with International Futures Group, a division of EFG Group in Chicago. Thanks for listening, and give us a call if you have any questions.